Hello, welcome to Accounting Hub. I'm Professor George Scarpin, PhD in Accounting, and our topic today is Worksheet, Trial Balance and Adjusting Entries. So guys, first of all, please subscribe to our channel. It's very important and you will be the first one to know when a new video arrives. And like our Facebook page, Accounting Hub by Dr. Scarpin. So guys, this is a not long video, but a video with a lot of very interesting topics. And usually it is a full chapter of our textbooks. So, first of all, consistent reporting. The accounting concept consistent reporting is applied when the same accounting procedures are followed in the same way in each accounting period. Accounting, we need consistency. So if we are recording salaries, salary expenses, we must follow with the account's salary expenses. We cannot move, I will change to employees expense. And no, it is not allowed. It's not desirable. We need consistency when we are recording our transactions. And what is a fiscal period? The length of time for which a business summarizes its financial information and reports its financial performance is called a fiscal period, also known as accounting period. And a fiscal period is 12 consecutive months. In a lot of countries, the fiscal year starts on January 1st and ends on December 31st. Here in the US, it starts anytime you want. However, it must be 12 consecutive months. So for instance, my business, Scarpin Corporation, my birthday is April 19th. So my fiscal year will be from April 19th until 18th or until April 18th of the following year. No problem at all. However, it must be 12 consecutive months, and usually it starts on day 1st and ends on day 30th or 31st. Okay? And what is this worksheet? A columnar accounting form used to summarize the general ledger information needed to prepare financial statements. So, columns. If we are talking about columns, nothing better than Microsoft Excel or similar softwares to work with that. And we will be working with Microsoft Excel. And remember, all our Excel files, they are free, and the link to download it is in our video description. So reasons accounts use a worksheet. Summarize general ledger account balance to prove that debits equal credits. Okay, if debits is equal credits, we are good to go. Plan needed changes to general ledger accounts to bring account balance up to date. Separate general ledger account balance according to the financial statements to be prepared, and calculate the amount of net income or net loss for a fiscal period. We can use Microsoft Excel or accounting softwares just like QuickBooks or similars that they also work with these worksheets. And we have planning adjustment. So before we start with planning adjustment, let's take an overview about it. So here, this is our worksheet. Let me zoom it a little bit. The number of the rows. So here, let's merge it. For the Scarpin web service, our worksheet for the month ended April 30th. So our fiscal year goes from May 1st, 2020 to April 30th, 2021. For instance, whoops. And here, all of our accounts. And how do we do that? First, we work according to our chart of accounts. First, assets, then liabilities, owner's equity, revenue, expenses, and sheet, and we don't need these ones here. Let's delete. Okay, please. Yes, what we only need is our worksheet and chart of accounts. So cash, petty cash, accounts receivable, supplies, prepaid insurance. And then we go through our liabilities, accounts payable, owner equities, capital and drawing, and so on. And we just transcript here our ending balance. Remember, assets, normal debit. Liabilities, normal balance is credit. Owner's equity, normal is credit, but drawing is debit. Income summary, here we have no balance. And then sales and expenses. Sales and expenses. So here we have all of our expenses and insurance and supplies, no expense at all, yet. And here debits equal to credits. So we are good. And what do we have here? We have two accounts. Supplies and prepaid insurance. Green. Yellow and green. The colors of the Brazilian flag, my home country. So here, supplies. Okay, we purchase it. It's our supplies, but we use them. When we use them, they are not ours anymore. My supplies, a lot of pens and papers. I use these pens, I use these papers, I don't have them anymore. So I need to move this balance here, or part of this balance, to supplies expense. The same, prepaid insurance that I pay for 1 year, for instance. I am using it, so I don't have 1 year of insurance anymore. So we need to move this balance here to insurance expense, and the supply to supplies expense. How do we do that? So cash paid for an expense in one fiscal period that is not used until a later period is called a prepaid expense, prepaid insurance. Reporting income when it's earned and expenses when they are incurred is called the accrual basis of accounting. That is mandatory according to GAAPs, to our generally accepted accounting principles. And not only here in the US, but all over the world. It is accrual basis accounting. And reporting income when the cash is received and expense, when the cash is paid, is called cash basis of accounting. We use it on accounting when we are preparing the statement of cash flows. But we will have a video for that too. And changes recorded in a worksheet to update general ledger accounts at the end of a fiscal period are called adjustments. So, let's come to our adjustment here. So, supplies consumed during the period, $400. So, okay, we have 850, but 400 were consumed. So, what do we have? Supplies. Our beginning balance is 850. Prepaid insurance is 900. So, what do we have here? Supplies consumed. So, what is the first of all, what date? At the end of our fiscal period. So, April 30th. So, we are expensing it. So debit, supplies expense. And we need to decrease these supplies because they were consumed. So our credit is supplies. How much? $400. $400. $400. So here, supplies, $400. And then our ending balance will be the sum of debits less the sum of credits. 450. So in our worksheet, we need to perform this adjustment. That is transcribing the journal entry. So supplies expense, a debit, 400. Supplies expense. Oh, come on, Excel. Respond, please. Let's freeze this panel. And then we will lock column and rows. Beautiful, huh? Supplies expense, debit, 400. Now we have only debit, no credit. Problems, because our credit is supplies. So supplies, 400. And now we are good to go. Okay, this formula is no wrong. Oh, this formula is wrong. And probably all the other formulas are wrong as well. Okay, so we will talk about it later. The other one, prepaid insurance, the same. Insurance expense during the period, $300. So date, April 30th. What is the name of our expense here? Insurance expense. And the credit, we need to decrease this prepaid insurance. So prepaid insurance. Debit, $300. Credit, $300. So we will credit prepaid insurance, $300. And now the ending balance, the same formula, sum of debit less sum of credits, $600. We will double check these numbers later. So what do we need? Insurance expense, a debit of $300. Prepaid insurance, a credit of $300. So that's it. And then, what do we have after that? Extending balance sheet, account balance on a worksheet. A financial statement that reports the value of a business assets, liabilities, and owner's equity on a specific date is called a balance sheet. So what we will be doing, assets, liabilities, owner's equity, we move those accounts from our worksheet here to our balance sheet. So how do we do that? The trial balance plus and minus the adjustment. So for the assets, trial balance plus the sum of our debits less our credits. Oh, good. And we copy and paste. Assets, we are here. And remember that we would be talking about the ending balances. Supplies is not $850 anymore, it is $450. And supplies for 50 here must match with the T account for 50 here. Prepaid insurance, 600. 600 here is not this. And must match with these 600 here. So we're good. What about our liabilities? It is a credit, so equal credit plus adjustment credits less adjustment in debits. Here. And then the second equity account, it is a debit balance. So we copy and paste the formula of a debit here. Everything else, it is income statement. So we don't work here. But we have a problem. Our debits and credits are not matching anymore. Whoosh, that is bad. Why it is not matching? We will see it later. Just a second. Okay, balance sheet, we are good. Or, not so good, but we are going there. Extending income statement account balance on a worksheet. So, now we are doing the same, but with the income statement accounts, revenue and expenses. So, let's do it. We have some adjustments here. So, sales is a credit account. So, we can copy and paste a credit formula. Oh, it will not work because it is the income statement here. So, let's do the formulas. Equal credit plus adjustment on credit less adjustment on debits. Good. Now debit, advertising expense, debit plus debits less credits. And we can copy and paste here. And what do we have? We have a problem here. They are not matching. Whoa. They are not matching here. They are not matching there. We have a problem. What is our problem here? Revenue less expenses equal net income. So what do? We need a debit to balance here. So our debit will be our net income. So equal the sum of credit less the sum of debit. So this is our net income. And then we need to transfer this net income to our balance sheet. It is part of the income summary later. That we will be working on that on the following videos. Let me add myself here. And we need to transfer this money. It is on debit here. So we need a credit. That the credit is here because the normal balance of equity is a credit. And net income increases our equity. So now we are good. Now we are good on everything here. So that's why we have this second total. Here we add the net income. What if it was a net loss? It would be exactly the same, but the opposite. On income statement, we would be adding on credit and debit on balance sheet. Okay, some textbooks, they don't work with this debit here, so they would be doing only the formula in the balance sheet. So it would be balanced here, but not be balanced on on income statement. Okay, so both are technically right. I prefer this one. I am some kind of old school accounting where debits and credits always match. Okay, and that is how usually our accounting softwares work as well. Okay, guys? Cool, huh? I love this. And this one, see, everything is matching. So probably no errors. And this worksheet is very good for finding errors because sometimes debit and credits don't match. So we have problems. And there may be errors in the accounting records, maybe errors in calculation, or an amount may be entered in the wrong column. Two times on debit or 2 times on credit, for instance. Okay, guys, this is not so easy. It is harder than it looks. So watch this video how many times you want. Okay, guys, thank you so much. We are done here for today. Questions or comments, leave it here or email me at jscarping@gmail.com. Have a very nice day and God bless you.